On It's the Economy, we continue from where Manisha left off. The month of October has seen metal stocks like Hindalco, Nalco, Vedanta, Tata Steel, JSW, all of them surge between 5 and 12%. Actually, if you add today's rally, all of them have rallied between 6 and 12%. The reason has been the strong rise in base metal prices, so much so that many brokerages have turned bullish on metal commodities and metal companies. This week, copper prices on the LME have risen already, as of today, by 4%. Aluminium rose 4.5%. Zinc is up 3%. And over the month as well, they've risen nearly 7 to 8%. What are the reasons for the rally? Will it sustain? More importantly, for these questions, I'm joined by two experts, Jonathan Barratt of ETO Markets and Kishore Narne of Motilal Oswal Financial Services. Gentlemen, thank you very much indeed for your time. Jonathan, let me start with you. Do you think that this is the start of a rally, or are we in the belly of the rally for commodities?
Look, I think that is an interesting question. Obviously, metal prices have already rallied, so I think it's more of a continuation of trend. And it's also a continuation of the inputs that actually make that trend. Obviously, we've got interest rate decisions coming out of the US, trade deals with China and the US. So there's plenty of other things that can really accelerate this current trend, particularly in copper. So if anything, I'd say it's right. We're right in the middle of it, and there's a good chance it'll continue.
You only said copper. You're not that bullish on aluminum?
Similar, but when I think you look at the machinations of aluminium over copper, it's slightly different. Aluminium, we do have supply. The market is trading in a relatively strong contango, which is good. But when you look at copper, it's in about a $300 backwardation, which basically means that the front months, there is more demand for copper today than 3-4 years down the track. That tells me that there's that supply issue that we know that is still contained. It will continue. You add just a little bit more fire to this, by the way of rate cuts or anything, and copper will surpass the record highs and even trade a lot higher from here.
Okay, well, we will eventually carry even the LME stocks and the Shanghai exchange stocks. That data will be shown as you speak. Kishore, you know, actually, I got some very bullish reports from some of the brokerages. There is one from Elara. I mean, I did read your very bullish report as well from Motilal, and we are carrying that as you speak. But Elara points out that physical commodities have started seeing a lot of fund flow from the start of this year globally, and usually commodity equity funds follow commodity funds by a few months. So their expectation is that perhaps you're in the start of a rally for commodity stocks as well. Your overall thoughts on commodities and commodity stocks?
Yeah, I think I strongly believe that the time for physical assets has started a couple of years ago, and the tariffs and realignment of supply chains actually has tightened it further, because the movement of goods is not easier right now. Everybody wants to hold on to their strategic inventories at the same time. And also the consumption and the underinvestment, or maybe the production stagnation in many of these metals actually has caused some of the depletion of inventories. As Manisha was carrying the story earlier, you were also mentioning that I think if you look at LME inventories, aluminum is almost 50% down from its peak, maybe early into mid 2024, and zinc is down around 32% from the, and even copper inventories are significantly tighter. That's not the only story. The story is that the global surplus on the primary production level has been shrinking in metals like copper. They are still in slight surplus, but the surplus has come down significantly. In zinc also, it has toned down significantly. So we are having lower and lower surplus metal available, and on the other side, inventories are shrinking. So if you're looking at next 2 to 3 year perspective, we will be in a similar situation like silver, where you actually has depleted the inventories and you don't have any spare capacity or the surplus available, and every single ton, the additional demand of every single ton will be at a significant higher cost. So that actually will drive this super cycle. And so we strongly believe that we are in the beginning of a larger trend, any 5-6 years kind of a trend. Of course, we will be having ups and downs in this. But I think the structural super cycle could be starting. Maybe already we are in that for the next 3-4 years at least, and we have already started it maybe a year 2 years ago.
Oh, okay. No, that's the point I wanted to make. Is this a start of a long cycle? Because commodity cycles do tend to run for a goodish bit. Jonathan, can you explain the China factor? Earlier this year, we equity guys, who look at equities, we were told that actually China would be a disinflationary factor in the world because they are locked out of the US. They can't export to the US, so they'll dump in every country. And Asia will face disinflation because of China. But then there was a plenary meet of the Communist Party. And then there is this anti-involution news that's coming out of China. So is China an inflationary force or a deflationary force?
It's still deflationary when you look at the numbers. It's not doing that well. Although there is a little bit of green shoots of recovery starting to come along. I think the main key thing about China is its demand for copper for the green environment. And that's where we're seeing a lot of it go to. Now, China is at the forefront of what she's doing in cleaning up her act in terms of green energy. And as a result of that, there's a big demand for copper. So if anything there, you can see there's a big push in one area, which just happens to flow through to demand in the copper market. So I think China, and the other thing about China too, we're going to get some positive spin out of what's happening with trade negotiations with the US. So that's one thing. But also we've got China has this capacity to continue to support the economy. They're not in a situation like the States. Their economy is stable, although not growing, but they have this capacity to be able to inject stimulus. And I think to me, that is the one key difference between the US and Japan. Japan can hold its economy. It might not grow as much, but there aren't any major problems as we have with the US when we look at government shutdowns and so forth. So I think that the picture in China looks quite positive, given all the other machinations start to happen. So I would probably suggest that demand out of China will continue. The overall economy might soften, but the demand for primary inputs and commodities such as copper will remain relatively robust.
Okay. Jonathan, what are the kind of year-end gains you are seeing? Year-end is only about 2 months away. For 25. So give me a 26 number as well. Percentage gains for copper and aluminium. Copper, aluminium and zinc, actually.
Okay, no, that's all right. I think across the board you can see gains. There's no doubt about it. I think when I do look at copper, I can see that you've got from here an attempt to the new record high. Let's say it's 11,000. It can trade a lot higher. It can trade up to 12 and 13,000. Oh, given the right resources, given the right numbers, a cut in interest rates in the States, more stimulus out of Japan. I think that will continue. That will feed back into aluminium. And I think that aluminium's still got another 10 to 15% on the top side, as with zinc. I will have one qualification in here. Yeah. Okay. The prices look all positive. But if there is a showdown in the States concerning Trump's policies, which turn the economy around, then things will change very, very quickly. Okay. I mean, remember, there are some big issues still in the US. Yeah. If that turns sour for Trump, that'll turn sour for the commodity complex.
Yeah, I know we all were worrying about the big R word, but what is the last GDP number we have out of the US? 3.8%. I mean, it's hardly looking like a country which is anywhere near the R word, but we don't.
Just look at the one before that, where it was -%. So there's a big swing.
I agree. There was a minus 0.06. I take your point on that. Kishore, what are your expectations? I mean, how much more is there to run in these commodities?
Yeah, I agree, especially in copper. We are looking at 13,000 and beyond on the dollar terms. So that gives you roughly around 30% from here. And that can extend to $15,000. That's around 50%. So anywhere between 30 to 50% is what we're looking at next 18 months or so. So copper is very, what you call, in a firm footing for that rally. Zinc, we're looking at around 25 to 30%. So that's what upside looks like in zinc. Aluminum is, at this point of time, it has a bit more consolidation, what we see. But probably around 15% to 10% is what aluminum looks on the broader perspective.
Okay, well, actually, for Indian stock markets, it will be aluminum that they would be most watching. You expect that to be a bit ranged. I'm going to ask you on an unfair question before I finish, and that's on steel. I know there is no LME or raw metal on it, but a lot of the stock markets are interested. Jonathan, you go first. Any view whether steel prices will continue to rally?
I think steel prices will, as long as we get the policies that are in place and the macros that make sure that the economies will continue. I do get a sense, particularly out of the demand from general economies. Obviously, China's a big one there, and the US and also the EU. I think steel prices can continue to rally as long as the macros support it. So, it's a good story, just like the other non-ferrous metals.
Yeah, if growth continues, at the moment it does look like the US is in a fine spot. We don't know about global growth considering the tariff uncertainties. Kishore, your guess. I know steel is not your daily commodity chase, but what's your view?
See, basically, we are looking at around 8 to 9% growth in the demand for steel. So both on the major economies at the same time, even India also. But the raw material costs, especially the coal, is what is going to be the factor which we need to look at, because as the global environment policies are now a bit relaxed under the Trump regime, and he is pushing for coal. So I think the coal prices are going to be slightly under. In that scenario, the positivity of steel could be little under pressure. But at the same time, the overall price support I am seeing probably around 4 to 6% upside is there, specifically for India, despite all these things, strong demand growth and all those things. But prices are having limited upside, probably another 4 5% in 2025, but not that much large for this year.
Okay. Well, that's useful information and analysis. Thank you very much, Kishore and Jonathan, for making sense of the commodities rally. The non-ferrous commodities are going to see a lot more run-up, especially copper, where India is largely a user. Other than Hindustan Copper, we are largely users. But in aluminium, there is a more ranged rally. And in steel, perhaps we won't be the best beneficiaries of the rally, if there is one. Thank you very much for joining us. We'll wrap up on Bazaar on that note. Chartbusters, correct.